Let's unpack those market movements now with Martin Smith, who joins us from eNCA Capital. Martin, as always, thank you very much for your time this afternoon. Let's start off with the general market and the major themes that are informing today's movement. So yesterday, markets were largely in the green because of news around easing tensions between the situation with Russia and the Ukraine. That's done an about turn, and those tensions are back on, and market participants are a little bit cautious.
Yeah, absolutely. Like you mentioned yesterday, it seemed like things were moving a little bit positively in that direction, but it's very much front and center, and the market is firmly fixed on what happens with the Ukraine and Russia. Also, you've got in the background what central banks are going to be doing across the States and Europe. So there's a lot of things at play, but like I said, the Ukraine and Russia tensions are definitely the top of the list at this moment in time. And I think everyone's taking a wait and see approach. Our local markets held up relatively well, actually not relatively well, very well relative to the rest of the world. But like the US, we're taking a little bit of a wait and see.
What's happening with the local unit? I mean, what approach are market participants taking when it comes to the local unit, or maybe just emerging market currencies in general? It's fallen below 15 against the US dollar. I mean, over the last few days, it's actually been trading quite strongly.
Absolutely, and I think what we've seen is a nice bit of rand strength against all the major currencies, which is quite positive. It's quite a unique situation we find ourselves in, because you've got this period of rand strength, but at the same time, you're having this massive sell-off across global markets. So risk appetite isn't there, but the rand is strengthening. And it's not something that you see very often. So very, very interesting times ahead.
No, absolutely. Let's get into some company news out today. And I want to start with Truworths. Profits up by about 32%, and it also was able to declare a dividend. Your thoughts on those numbers that were released by the retailer today? Do you think they come a little bit off a low base, just given where the retail industry has been with COVID?
Yeah, base effects are definitely a function of the numbers that we are seeing. But I think what caught the market's eye is because we also need to remember this is an updated update, if that makes sense. So there weren't any major surprises, but like you mentioned, that dividend came through nice and strongly, also some share buybacks. But I think the big kicker, and the reason why the market's been quite excited, is you've seen quite a nice bounce out of their UK business, which was up 8% from a sales perspective, which is a very big part of the thesis as to why you'd own Truworths, is that UK business turning around. So people, I think investors thought that that was quite positive, and just, I guess, the general earnings momentum. So yeah, very positive from Truworths. I still prefer Mr. Price in the sector. But yeah, like we both mentioned, positive from the company.
No, absolutely. I mean, we've run out of time, Martin, so I'm trying to decide which question I want to ask you on. Let's perhaps go with Bidcorp. They're also really saying that they're going to see a strong comeback after that rapid spread of COVID-19 in the last part of last year, really just benefiting from the improving times. What did you make of that?
I'm glad that we got to chat about Bidcorp, because I think it's a buy. I think you can make some decent returns there. The number generally in line with consensus, but we've got to remember, like you said, they've got that COVID base, that kind of 2 months of Omicron from the first half. So I think the second half will be better, and I think you'll see earnings upgrades coming through. I think this is a good business to own. I think you'll see a nice normalization of earnings. And I think also you need to remember it's quite a nice hedge against inflation, because they can pass it on to consumers. So I thought a relatively good update, and I think it's a buy.
No, absolutely. Martin Smith, as always, thank you very much for your time this afternoon.
Thank you.
Martin Smith from eNCA Capital, giving us an update on the markets and their movements today.